What is going on, everybody, and happy Sunday, March 12th, 2023. We are live. I am back after a week hiatus, up in the mountains, driving across the entire country, storms, everything, snowboarding, did a lot. So we're finally back, and holy shit, do we have an active week? I mean, right now we're looking at futures. It's late on a Sunday night. I know it's 10 p.m. Eastern time, but I figured I'd jump on for at least a little bit just to talk about what the heck's going on. And we'll do some live streams this week, so we'll see what's going to be up. But at a minimum, the whenever I go away theory that I always kind of have for myself, shit hits the fan or something big happens, generally to the downside. It's been the case the past like year and a half or so, maybe longer. It happened again. So not that it was necessarily anything that I was looking to do. I was just shutting off for the week, but we got a pretty big downside move. So I go to futures here, and you'll see now we got this pretty big green candle here. It's still inside the range of Friday, but really, if you go back to Tuesday, big move down. We had that consolidation kind of small bounce on Wednesday, big Thursday down, and then pretty substantial down Friday with the whole Silicon Valley Bank mess, absolute mess. To be honest with you, I kind of stayed in touch decent amount with what's kind of generally going on, but a lot of the details as to what's happening right now are pretty much recently coming out, and it's essentially the situation now is that the Fed is not bailing them out, but some almost see it that way. Whether the Fed's kind of putting it, they're saying that there are concerns for depositors and that these firms are not going to get bailed out, but they're going to protect depositors is kind of how they're phrasing it in a sense. From what I've been seeing, looking at some of the latest headlines, some of the latest news. So we'll see if what happens this week. Obviously, markets reacting in a positive way, futures-wise right now. We're up about 1.25% or so on the S&P and the NASDAQ, and then the Russell is up roughly the same. But the bigger story, I think, from last week that I was watching was you got this massive move down in yields. So here's the 10-year yield. Okay, here's the 1-year chart. Each of these candlesticks is 1 day. Thursday, Friday, big move down in yields. So yields essentially, was ripping to the upside. Hey, Fed higher for longer, inflation staying pretty hot. And then massive dump. So here's a couple of theories that I want to kind of talk. We'll talk a couple theories at least. This could bounce back. Obviously, we'll see what happens, but this could easily bounce back. We shall see. However, these concerns essentially are like, hey, if banks are collapsing now, of course, did they make their own mistakes? Is there a lot to be blamed there? How much is the situation higher rates? How much is it themselves? Let's be honest. At the end of the day, if you're mismanaging funds, it's on you, right? It's just like any of us, right? Any of us idiots out here, are managing our portfolios, and you're like, yeah, I think we're gonna, stocks are gonna go up or down. So you buy a stock, you sell a stock, you go short, you go long, you buy puts, you buy calls. You're wrong. Who's coming to bail you out, right? Generally speaking, nobody is. But the idea here is that, hey, if there are bailouts, right, maybe this market bounces back. Outside of that, the other idea is, hey, if there's shit like this happening or even signs of this, what does it mean? Maybe the Fed's over-tightened and that rates are going to come down shortly because the Fed's going to have to counteract this, mess. Like, that's kind of the concern, hence why we saw yields come tumbling down a little bit. So we'll see. We shall see. What's going on, guys? Hope everyone is doing well after this past week. Will SVP open up? We shall see. The thing that's interesting, too, is that my dad works at a small bank. And so we were skiing this past week, and I'm like, hey, Dad, you hear what's going on with SVP? And he's like, what? We weren't really in touch. We're out in Montana skiing in a couple of days. He's like, oh shit. And then he started paying closer attention later on in the week because it potentially can impact him, right? And if people stop trusting small banks, right, it's not even about how the bank is doing, how they're managing funds. You can be fine. This bank is apparently fine. But if people are just skeptical and they're like, hey, I don't want to put my money in a small bank, then they're kind of screwed, right? They're not going to have depositors, not going to have cash. It's a problem. So it's the Fed coming in potentially, we'll see how this plays out, and making some sort of stance or saying whatever they're saying, at least as of now, as they're quoting it, They're looking to protect depositors, right? They're protecting depositors, not bailing out the firms. You know what I mean? People might feel comfortable, and so that helps, right? So this is kind of good news in a sense for some other bank stocks. Maybe there's a big bounce back on banks. We shall see this week. That's kind of the idea. So we'll see. And American economy collapsing while you're gone. Nothing much going on. That's how it seems. But yeah, I mean, I kind of left on Sunday and was like, all right, plugging out or unplugging for the weekend, whatever. And then it's like Thursday, Friday. I'm like, holy shit, man. Pumping the market so there's enough liquidity for the big boys to get out. Maybe before CPI. That's another theory as well. So let's get into that. The CPI, we'll do this. We'll have a live stream tomorrow. No news tomorrow, but we'll have a live stream tomorrow afternoon. That's like kind of the plan. And then I'll have one on Tuesday morning for CPI. I'll be leaving on Thursday, so I'll be again jumping out of here Thursday for until like mid next week. So I'm kind of taking the second the second piece of the trips, the ski trips, but I'm at least here until I'll have the first 3 days. So the first 3 days to hang out and talk about this. And that's good because the CPI is coming out on Tuesday, and then PPI, core PPI, is coming out on Wednesday. So there's a lot of good stuff. We'll actually might even do a live stream for this too. So we'll see. But it should be an interesting week because, this is going to be good to give a gauge. Now, here's another theory that I kind of saw floating around on Twitter just now as I kind of was just, scrolling through things in the plane and whatever. And, we had this freaking drive. We drove from Montana. Bozeman, Montana. My dad and I swapped back and forth until we got to Nashville. I flew back to Austin from Nashville, and then they had to take the rental car back to Georgia because my brother used to go to school in Montana. Had to clean out his locker or his storage unit, so we had to rent a car. Couldn't fly home with the stuff. It was a whole ordeal. 30 hours of driving. It was more than that. I mean, we had to drive through a blizzard. It was a whole shit show, but that's besides the point. Kind of catching up on stuff. And here's a theory. If the Fed is going to step in any capacity or just kind of reassure that we're okay, like, hey, we can help if needed, whatever ends up happening here. If that's the case, the theory was that I saw floating around was that tells you that they feel pretty good about inflation, right? Because if they're going to potentially throw any signs of being ready to help and whatever, then that means that means they probably got a good handle on inflation, so they're not really too worried about them helping and just letting things collapse and fail because inflation's never coming down, and they kind of need that for inflation to come down. They maybe have more confidence that they don't need mass destruction to get inflation down. So I don't know. That's another take on that. Now, of course, I think this CPI on Tuesday, it's for February. The first couple months of the year is kind of like that beginning period. Here's some theories there too of the first couple months of the year of CPIs, it generally can kind of run hot and whatever. So we'll see if this is going to, I don't really have high expectations. They're expecting CPI to come in at 6.1%. It looks like that's the median forecast. We'll see. We get a 5 handle. Market's probably going to clap for joy. If we don't, I don't know how much really matters. The thing is, let's see what happens tomorrow. But my other theory too, as I was just kind of thinking things out in my head on this massive drive, I was like, hey, if we dump this much, I now, of course, different reasons, right? But, maybe this is a bounce back day tomorrow, or we'll see. But if we dump a ton, right, into this CPI, a CPI that comes in, they're expecting 6.1, it comes in 6.2 or 6.3, does that mean we're going to dump to freaking down here? Probably not. And it maybe mutes some of the effects. And so you kind of had this news as a cover for, what maybe a little bit of a hotter CPI, pricing that in. And this news kind of gave us the cover, a little bit of panic and whatnot. That's another theory as well. So we'll see what happens. I mean, this other idea of what if all of a sudden this comes in low, CPI comes in low? Well, if it does, then maybe there's a squeeze out to be had because there's a ton of people that panicked. I'm sure this past week, you see this news, you're like, holy shit, puts. And it's easy to get into that. If we check out the Fear and Greed Index, just a new tab. Fear and Greed Index fell back into extreme fear. You know what I mean? I mean, it's because it just look how fast that was pretty fast. I mean, we were up in extreme greed not that long ago, right? Let's go check at the timeline. Yeah, I mean, back in early Feb, we're up here 75 plus extreme greed and just boom, right? We were sitting up here, early March at 54, on the neutral side, but the positive side there of 50, down to sub 25 like that. It's pretty fast. So you just see how quickly everyone is ready to jump the F off the ship and go short or go bearish, whatever, right? I'm curious what the AAII. I'm not super. I'm not surprised. This came in at more bullish than the last month and actually less bearish or the last week. But the thing is, this is the week ending March 8th. What happened was a lot of this fear came in the days after this survey was done. So I think that this is going to be the next survey might have a bigger piece. But then again, you got this news now, the Fed may be stepping in to some capacity and, things not being as bad. So now you got this kind of back and forth. And so maybe that makes things a little more skeptical. And there's probably people more skeptical, maybe more of a higher neutral standpoint in this next reading. But no, either way, you still got a lot of bears back in the game, and many are probably acting upon that, not to mention, sentiment-wise, the past couple of weeks, ever since the early February peak, and we started to kind of roll back over more bears. Add in panic in the markets, nothing like price to change, perspective or to change sentiment, right? So add in this downside, I'm sure you got more bears now feeling good, or people who are, getting into the party on the short side or the bearish side, however they want to do that, whether they're selling stocks, whether they're going short, they're buying puts, whatever. So that's kind of the thought process from a sentiment perspective, but we shall see. Futures cryptos are up. Particular cash flow, amount of long-term debt is staggering. Yeah, this is the debt. What's the whole thing the Fed's been talking about? Congress has got to raise the debt ceiling. That's a whole other story in and of itself. That's separate, I know, but it's a whole other story in and of itself. It's across the board. It's nasty. A lot of selling, though. Last week was a pretty nasty days. We had some big volume downside. The volume was huge. I'm looking at futures here, S&P futures, but same general idea here on SPY. Look at the volume on Friday. Huge red volume. Red candle there. Big on Thursday, highest or one of the higher days. Actually, Thursday was the highest volume day of the year. And then Friday was like almost double that. Not almost. It was not double, but it got a lot. On SPY, we had 111 million shares, almost 112 million shares traded on Thursday, and 189 million on Friday. So that's the look. XPI broke down hard. Yeah, looking back, I did get out of my Labu, not necessarily because I was like, screw it, it's done. Time to go short. But I was just more so like, hey, if this thing consolidates for a while, I'm not a fan. Hey, and also pressure on this trend line, not liking it too much. But that was a big move down. That's big. Now, the thing is, I think a lot of there are ties to a lot of biotech companies, tech companies, and whatnot. There'll be a good bounce, I think, on this one tomorrow if this futures thing holds and the news holds. A lot of this stuff, a lot of these companies is like Silicon Valley Bank is, a lot of money here. We're talking about tech. We're talking about spec. We're talking about, a lot of these companies that maybe aren't, the most reliable long-term investments, right? And so, yeah. Biotech's makes sense that they're going to take a hit, and they took a bigger hit, the past couple days, down 4% Friday, down, similar on Thursday. So really nasty finish of the week. This is the biotech ETF, so it got crushed. Probably see a bounce back. Who knows how big and when or how high, back up to like $80 could be an idea, maybe the first step, and we'll see a lot of volume here in this 80 to 83 range. So maybe some volume resistance, tough to get through that area. We'll see. But, looking back, this is no longer an interest to me unless I, somehow bought on Friday knowing that we were going to get some news over the weekend that would be positive. And, I'm not going to play that game, right? Maybe, but from a chart perspective, that's not a great look. Broke down. Should we expect it to just go like this? No, not necessarily, right? But, pretty good chunk of the move off the trend line already occurred. So I'm not a huge fan of shorting it here, right? This isn't, risk reward isn't really in your favor as much as it was maybe on the day that it broke down below this, actually on Wednesday, because we actually on Wednesday broke below the trend line here, and then boom, 2 days, boom, boom, right? So that's the idea. Caught a short, but should have held longer. I feel like it's in hindsight, right? That's the obvious play. The thing is, right, a lot of people probably went short over the weekend or on Friday, and now they're like, oh my God, I'm going to cash in huge, and look what happens, right? You're going to get kind of burnt going into this week if these futures hold, which were up at 1.25%, 1.25%. So I'm so freaking thirsty though. Been eating like shit. And also just dehydrated from, I guess, the altitude and just skiing a ton. Get ready for some put purchases. Free real estate out there. XLE looks interesting. Hey, I got the, well, let's just check. I haven't checked in on XLE. Here's the energy sector. Oh, yeah. Here's the energy sector ETF. I mean, I had an alert that triggered here at this like 82.60 zone. We just nipped below that, bounced and closed like right at it. Could easily bounce here, but let me tell you, this does not look appealing as a long. If it bounces here, great. You know, you would need to see us get back on XLE. You want to see us get back up towards like 88, $90, right? Break that lower high, or break this kind of lower high trend we've been seeing to get a reversal there. But this is not a great look. And I have Oxy puts, I have MRO puts. MRO, this is for next year though. I got out to next year. MRO just broke the trend line. Did I buy these a little early? Yeah, I bought them somewhere in here, but I bought a year at a time. So I was somewhat anticipating, was that a smart play? No, it wasn't necessarily a technical play. It was more so a hedge. And let's position ourselves into something that has potential nice downside if the markets are weak or if they're not. You know, oil has been strong, expecting that to kind of be those stocks maybe to kind of rotate out, right? As things are now chart perspective are starting to see double tops, lower highs, like the trends are reversing on oil tickers, which is good if you're short. You know, oil itself, here's oil's chart, looks like a fat bear flag to me, you know, setting up. Here is the weekly chart. I mean, you're just consolidating after a nice leg down here. You're just consolidating under this level, you know. I mean, it's only a matter of time until that breaks, unless something happens. Of course, this doesn't have to break, right? It's just a technical play, but it doesn't have to break this level. But pressure looks to be solid to the downside, so I'm looking for that. Which should help those oil tickers. I got Oxy as well. Let's check out Oxy, OXY. Those are my hedges out. Yeah, here's Oxy's chart. Here's the daily chart on it. What did it do? I had this uptrending channel, or the zone, I guess, of higher lows. Wasn't a perfect trend line, so I drew a box to make a better feel for the zone. Came back to the top of it and then rejected off of it last week. So ideally, we're looking for a bigger move down below 57 next, or 58, you know, and we'll see if we get that. But that's the low. I'm not stopping out until Oxy gets back above like 67, 68 bucks. That's up here. That's my two alerts set. New lows on the year, and then new, it's, I guess, almost pretty much new highs on the year. So market emotions have been very volatile. That's just what I mean. Hey, and I was looking too at SPY. I'm kind of like, I think there were some good opportunities last week. I think for sure downside, especially on Thursday, Friday, some nice clean moves. But honestly, it's just been, again, same kind of deal. It's been kind of just early before Thursday, Friday was kind of choppy, you know. We had this day, you know, we had this big move down, I guess. Yeah, no, a move on Monday was this move of up, down. Tuesday was down. Wednesday was consolidation. Thursday was up and then down. So it wasn't necessarily super clean, right? It was a little bit trickier. And even Friday, right? This big pops and drops. It wasn't a clean. Thursday afternoon would have been the cleanest downside trade opportunities. You know, you had the pretty consistent downside pressure. You had pretty nice, you know, pretty nice movement there. Price action in terms of downside on SPY. So shorts on Thursday would have paid nice. It was just a little tougher on Friday. I got these bounces here. You know, unless you caught some of these tops or bottoms, it was a little bit tougher. Then Thursday was kind of playing with that trend, right? Thursday was a nice day to play the trend. Fed billing out SVB. They follow this up with the pause. Yeah. Yeah. Who knows? That's kind of what the bond market's maybe thinking. So let's just jump over and check this out. What was it? It was FOMC. It was like some FOMC site. FOMC interest rates or whatever. So yeah. So next week we got the Fed hike. Now, of course, I don't think they're going to just cut rates, right? But pause. Look at this. look at how fast. I mean, we were talking a week ago, literally a week ago, Fed 50 basis point hike looks more likely. It's trending towards, higher chance of a 50, as time is moving on. Just like that, the 93.7% chance of a 25 basis point hike from the Fed really in about a week and a half. So 25 basis point hike there. And again, I think it makes sense, especially with this news, right? For the Fed to just kind of coast at the 25s. They got to go out until September, November. Who cares, right? But let's just coast 25s. Let's just see what happens. If more shit like this starts happening, then they're able to kind of cut. And they haven't done a lot of near-term damage. Because again, this is a big lead. It's a lead and lag game, right? So inflation runs up. Fed reacts. The problem is there's a lag. So the Fed's rate hikes that they did the past 12 months or 6+ months ago now are now really rolling into the economy more and more. But the Fed rate hikes from last month or last hike, February 1st, that doesn't matter very much. And so, their idea of like, okay, if we do a 50, if we do a couple 50s here, if we do a 50, what if shit hits a fan and we got to backtrack, but that 50 basis point hike, those effects haven't been felt yet. They're still coming. And we got more pain to go through in the short term. So kind of like that 25 is kind of your way to kind of coast until you want to pause, is the idea. At least that's kind of how I'm viewing it. So we'll see what happens, but that's the look right now. 25 looks pretty likely for the next hike. And also, when you see the bond market make a move like this, you go to look at the 10-year yield. When the 10-year makes a move like that, that's telling you something's happening, and, you're probably looking at lower rates or expected rates, right? March Madness in many ways. Many ways. I went to Penn State, so Penn State finally made the tournament for the first time since 2011. They were on track to be like a nice single-digit seed, I believe, back in 2020. That was my senior year. But that was COVID. They canceled the tournament, so I'm like, oh, of course. But finally, they got to. That was when I was there. Was gonna be that season was awesome for them because the basketball team has not been great, over the years. But they finally are turning around. This team looks great. They made it to the Big Ten title. Sick chance to win at the end. Just couldn't do it. Purdue's solid. Purdue's a 1 seed, but I mean, I'll take it. They made it a lot further in the Big Ten tournament than I thought they would, to be honest. So March Madness in many ways. Why are futures up? Well, I mean, the news that was coming out, right, is essentially that the Fed is potentially stepping in, right, in some ways. They said their actions will ensure depositors need not to worry. So the Fed is essentially coming in and taking steps to ensure the system stays strong, right? They say signature bank depositors will be made whole. Treasury official, banks are more resilient than pre-crisis. They've been saying this is not a 2008. So they're just coming in and like reassuring that we're okay. Now, are we okay? Who knows, right? But they're kind of coming in reassuring we're okay. Now, I think the reality is going to be, do we see anything different, right, in the next Fed meeting we're going to get, in about a week and a half, right? The terminology that's used, Powell's statements because he's going to get drilled with questions, right? Because Powell, I believe the next time he speaks, he's not speaking this week from what I can see, at least anything that's currently forecasted, but he will be speaking on Wednesday, March 22nd with the FOMC statement. They're going to have their statement. They're going to have the rate hike decision. They're going to have his press conference, all that good stuff. So that's going to be a big day. You're going to get a lot of questions from him, getting just grilled. Probably, hopefully some good stuff. I mean, so we'll have a live stream for that. It should be some good stuff on hear what he says and how the market reacts to it, right? So I think markets up or futures are up because people are feeling, okay, maybe it's not the end of the world. Because you kind of have that same idea of like, oh my God, like, what's going to happen? I don't know. And like people panicking, right? So you kind of got a little bit of that. Now people panic a little bit, freak out. Wait, it's actually not going to be that bad. Maybe that's not true in 6 months, maybe in a month, maybe in a week. I don't know. But for right now, the Fed comes in. The Fed can kind of reassure that we're okay, pump the brakes, relax. They can avoid a market crash or whatever you want to call it, a bigger panic sell-off. And I think the market's been kind of resilient. Not to mention that you just packed a bunch of shorts in there. So I mean, we'll see what happens, but you just packed a lot of shorts right back in like that. And we talked about how quickly sentiment changed. I mean, sentiment was a month ago, we were in extreme greed. Now we're into extreme fear. Like that. So people jump and ship fast. People are ready to just, with how things have gone, right? We're not going to see it. It seems like we're not going to get that kind of slow. People kind of start jumping back on the boat, boat, and then we just kind of take off and kind of head back up. The second you see a sign of like, wait, things are not that good, everyone's jumping off the boat. They're out. They're jumping. They don't give a shit. They're out. They're going back short. Screw this. Let it die. The problem is, here's another thing too. The problem is that like we can look at this stuff from a couple perspectives. You can look at it as like, oh my God, like I'm in puts, fuck Powell, fuck the Fed, all this stuff because, why? Let it fail, let it die. It was their fault, right? I'm not going to get bailed out if I'm wrong. Why these, if I make a mistake, my portfolio, why is this going to happen there? Hey, it is what it is. You can be pissed about it at the end of the day, but when you're pissed and you're slapping and smashing back into puts because you're pissed, what if we just kind of recover the past couple of days because everyone feels like we're good again, and this is just it's a isolated issue. It's not something to worry about, and we're reassured that we're good. Then you get a CPI, a PPI coming in that come in maybe cool. I don't know, just throwing out a perspective. You could be on the wrong side of a trade super fast because of how this market's been. March Madness, right? As we've been saying, it's just up and down, up and down. Is it worth it? Is it worth it, right? You got to think that to yourself. Is it worth fighting this right now? Probably not. And looking back, we've seen it's been best if you've been a little more nimble around more so the fear and greed, more so, when the market's kind of got a little overbought, right? Time to kind of trim things off. Maybe that's when you put the hedges on and stuff. When things get oversold, people get pretty fearful. I don't know if you want to classify this as like insanely oversold. It was a couple of days. My thought process was this. If we kind of dump off a bit more this week, after a CPI and whatever, maybe there's an idea for maybe a little long hedge almost of like toss on some longs, right? Toss on some more longs because you got some better dips. And if we kind of bounce, you can kind of trim some of those off if we bounce back at some point because we've gotten pretty oversold. That's kind of like from a big picture, sentiment portfolio perspective is kind of my idea. Doesn't look like we're going to get that, unless you were buying last week, which maybe was peak fear of this situation for now in the short term. I don't know. But that's kind of been the way to go. You almost trying to play the trend. The trends haven't been very long-lived, right, this past year. So if you're nimble, you can do it, but you got to be careful, right, with the trends. It's more so like the contrarian trader or investor the past year has done well because you've been kind of just doing a lot of this, right? A lot of this. Now trending lower, but like just doing a lot of this. So double down on Labo Thursday afternoon, get more on Friday. And it get down more. Yeah. I mean, the thing with Labo though is it's going to get crushed. It's going to get crushed when you have a move like that on XBI, and especially when the market's going to hit that hard. So it's going to get crushed. The thing is, this could easily bounce back, I think, this week, especially if this market is resilient. This could bounce back. Labo can bounce back up towards 6. I don't know if it's going to go to 6, but it can bounce back towards 6, which is a decent percentage move from where we closed on Friday to 6. Let's see what that is. Yeah, it's like 25. It's like 25%. Pretty good. WFC is on the high end of my watch this week. Has an upward head and shoulders pattern. Let's just take a look at that. So if you jump over, let's just pull up the banks too. The thing with this is that you are into a zone. I'd be cautious here because this is kind of a spot that we've been finding buyers. Buyers have been coming in on Wells Fargo down around $40 and just below, down towards like $39.50, roughly speaking. So you catch yourself on the wrong side of this trade, and all of a sudden Wells Fargo is back at 46. This week, let's just say, because confidence is restored. Maybe it's not that high. Maybe it's like at 45. Back up to here. You got to be careful, right? We start to break down below this. This is a great short, I think, big picture setup, maybe even a swing idea. Or if you go to the weekly chart, right? Look at here. Yeah, look. Here's the weekly. I think it shows you a better example. Look at all these wicks, right, on the weekly coming into the zone. So just be careful, right? It came in there. Buyers were found again. Now, We do whatever, we come back down. Eventually, that is going to get weak, and if we break there, that could be a nice downside trade. But for now, we have just proven, buyers have proven resilient yet again, so just be careful on that. The big picture looks good, and the contrarian idea looks better when it pops back up. If it makes a lower high, it could be a better idea. BAC, whole banking industry going this week. This is going to be a concern. I think that the thing is, off this news from tonight and whatnot, yeah, check this out. We had this potential inverse head and shoulders setting up. Look at that. That's gone after this past week. This looks a lot weaker. Bank of America a lot weaker than Wells Fargo. Hit a new low, actually. A new low, a new 52-week low last week, and then it bounced back. Okay? It's kind of doing this thing, like if you draw a trend line off this weekly chart, you know, where we kind of could connect this, and you kind of have this like downtrending support almost. I don't love that. I much prefer uptrending support as a more respectable area. These like megaphone patterns and the downtrending supports, we've been seeing a lot of them, I feel like, which is kind of like showing like bigger range. But I'm not a huge fan personally. I would be careful. If we break the lows of last week, okay, I think we got some more downside to come. But if we don't, if we bounce, we're probably going to bounce. We're probably going to open up. Markets are up nicely. Futures are up nicely right now. You're probably going to open back up, you know, maybe not back to the highs of last week, but you can open back up, you know, and recover 25, 50% of the downside of last week pretty easily. That could even be tomorrow. You can recover 25+%. We'll see on some of these names. If we go over to XLF, which is the banking or the financial sector ETF, got crushed, right? Huge dump. Clear resistance on XLF here at 37. After this news, though, I just don't know if people are going to have a lot of confidence to come in and buy this. Like, I just don't, even if the market rallies back and things are okay, it was an isolated event. Is there going to be a lot of confidence, a lot of money flow into the banks, into the financial sector? Probably not. Like if the market rallies back and let's say goes to a new high on the year, which is, you know, a lot from here. But if it were to do that, do you think banks lead? I would probably say no. Although who knows? We'll see what happens this week, and that could change our minds if we get some really big action back up, bullish engulfing type stuff. Who knows? You know, maybe there's something there, but I would imagine that banks are probably not going to lead us on the way back up with this news. You'll just feel a little more skeptical. XLI, the industrial ETF, check this out. Look at what happened last week. We actually did get above that 104 that I was looking at. I had an alert go off on this level. The thing is, we didn't close. We could not close up there. We actually didn't have a day that closed above 104, and so I didn't take that swing position. And good thing I didn't, looking back. Ideally, you know, you would have wanted to see it hold this 99 area, or it's kind of at that now, this 99.45, and not really. So let's see what happens here. I still like it for an eventual breakout. If the market is going to be strong, then this thing above 104 is my favorite idea, my favorite play. If that's the case, here's the weekly, or here's the monthly chart. Look at all these monthly candles just stuffed up against that. I mean, it's still that candle looks more like a hammer, a downside hammer there, which doesn't look great. But this week could change our minds if it pushes back up towards the highs up here towards that 104. So we'll see. But keeping a close eye on that. You know, it's staying tight after this big move up. It's staying nice and tight, as I like to say. And so the tighter it is towards this top of the range, the more pressure, the higher the likelihood that we eventually could break through. If we do, right? If we pop that top of the range. So we'll see. We will see. Fed's in a sticky situation where they have to continue hiking despite the massive debt. Yeah, I mean, we'll see what they want to do. I think, to be honest, the Fed in the perfect world is like, hey, if we can really get inflation freaking down right now, this would be a great time to kind of just relax. I think that's probably what they would like to see. So the next couple of CPIs, important. Well, this week's CPI and PPI, pretty important. Now, do I have high hopes? No, not really for good numbers. I kind of like, I wouldn't be surprised. You know, if we get some hot numbers, or, you know, we don't come down and we don't, you know, end up below the 6.1 forecast on CPI year over year and PPI year over year, who knows? But, you know, anything can happen. So I'm not going to sit here and say, oh no, puts because, you know, we're going to come in hot. I have no idea. Fed pivots, epic meltdown, inflation will come in hot. Yeah, no, it will be interesting to see. And I don't think they're going to do that in a quick manner until something bigger happens, which I don't think, we'll see. This is scary news, I guess, but I don't think it's necessarily like, terrible end of the world, 2008 type stuff. It's concerning for sure, but it doesn't seem like it's that bad in my opinion. As of now, based off everything that I've seen, which hasn't been a ton, but we'll see. So more likely they're going to kind of pause for a while and then, eventually pivot, which the pivot is when it depends on how long that plays out, but there could be that period. We've been looking back through and seen a lot of reports or a lot of charts that show you like, hey, when the Fed finally pivots is when the market tends to kind of see big time downside. Why? Because they're pivoting because something is not right. They have to now correct, an over tightening in a sense, right? In a perfect world, what the Fed wants to do is kind of like raise rates, hold them for a while, slowly come back down, back up a little bit, not like these drastic moves. And it seems like we could be on pace for some more drastic moves, which is a good thing for volatility though, I guess. Loving the price action, BD about for futures. Yeah, catch all these moves. 300 before the market's even open. Boom. The thing I was looking at too was, I'm back to, yeah, look at that. Well, 1.67 now on Futes. When did they open up? They opened up here. Yeah, I got a big move down. The thing is, a little concerned with the news. It's a little bit different on the news, I would say. But when we have these big gap ups or gap downs on futures, I've at least seen in the past that we get some decent correction back towards some sort of median or mean before any more continuation. And that's kind of what happened here. If you could have done very, very well, you had, this is look at the micros, you could have had this at 39.27 top right here roughly. That fell back to 38.90. So that was, what is that? Like a 35 point move in a matter of like a half hour. Like, holy shit. Like, that's a big move. So it's good stuff when you're seeing volatility like this. Good stuff. Investing in Wells Fargo, used to own it, sold for gains. Won't take advantage of this year. No, that you could get some better. The freak out could provide opportunities for sure. Nice not to roll all these different stocks and sectors. Yeah. Doesn't the Fed billing at SEP signal the inflation isn't that bad? Yeah, that's what I was saying. There's a theory, right? I wouldn't necessarily say, I saw that rolling around on Twitter, a little earlier as I was kind of reading through some stuff and looking at some articles and news and whatever. And I was like, yeah, it makes sense. I mean, if the Fed comes in and they're like, hey, we can be here to help if needed. And whatever they're kind of saying along those lines, they're kind of using like general terms and they're saying, well, it's not a bailout, but we're protecting, the consumer and whatever. This is not 2008. Hey, things like that just kind of restore some confidence. And if they're saying things like that and whatever, that's telling you that they might have in some way an idea of inflation not being concerned. I think they come out every day, it seems like, and say, well, inflation's too high. Yeah, no shit. And then they know that. It's not like it's like, anything crazy. Like, we know like inflation's high. And then yes, the question is not about what happens right now. It's what's going to happen in the next couple months. Is it going to start coming down hard, or will it continue to come down right at an aggressive pace this beginning of this year? If so, then hey, like they're kind of chilling. They can do whatever they want to do, and they don't really have to worry as much. So we'll see. They won't cut. It looks like that the cut is. I really don't think the cut's happening anytime soon. Pause in terms of pause, maybe in the near future, but I don't think this month. They pause this month. I mean, that's going to cause an uproar, I think for sure, but we'll see. Powell's biggest thing prematurely returned 25 basis point hikes. Going back 50 will send a rip. Their market for sure may lose complete confidence. Yeah. I mean, I think the biggest mistake realistically, right, is going back, a year ago and not raising earlier, right? Probably. Trade MNQ. I mean, if you trade the NAS, the moves are even crazier here, right? The S&P, I try to keep it consistent and look at one of them, right, and pick one. But same general idea. The moves are killer on this too, on even micros. Kind of perfect storm knows how fast they come out and ease the problem at the end of the day. Yeah, we're found on pillars the same. That's kind of almost like a double top too there on that. What was that 20? No, like almost a 30-point move there on MNQ. But okay, so I want to just jump on and look at a couple things. Let's see. What else? I want to look at Let's look at nat gas. Let's run through this really quick and look at silver, gold, Bitcoin, all that stuff, and then we'll wrap it up because I am super freaking tired. I probably have slept like the worst over this past week that I've slept in a long time. So I'm trying to get to bed a little early. It's almost 10 o'clock my time. So I mean, ideally, and I get up at around 6, 7 o'clock. I try to get up earlier sometimes, but if I go to the gym. But tomorrow morning will not be a gym day for sure. That is for sure. Sleep is more important tonight. But oil, we got this kind of flag developing. Here's the daily. I think it's a flag setting up, or at least a consolidation, a wedge, whatever you want to call it. We're setting up for a move here. Oil back above 84, concerning to the upside. Help hurt CPI. Oil below 74, 73, and we got a test of lows most likely coming based off technicals. Nat gas is at 250. Had a big pop and then drop, but what you're going to want to see it do is maybe hold this like 240 to 250 area. If we can do that, maybe it's got something, but just weird price action. Not interested in me. I've gotten fucked every time I try to play natural gas, so I'm not touching natural gas. There's no chance at this point in time. I'll watch it do whatever it wants to do, but I'm not touching that. Bitcoin, really strong move back up after getting crushed last week. Big move back up. We'll see what it wants to do here, but the highs of, I guess, this year up around 25, just over 25K. It's here sitting at 22.3. It's not that far off the highs, in all reality. So it's kind of interesting. Gold, look how fast gold popped right back up. Gold and silver took some pretty big hits over the past month, right? So from February 1st, or from early February to like early March, gold goes down like 8%, which is a pretty big move for gold, right? Gold doesn't move like freaking, I don't know, like Tesla stock, right? Gold doesn't move like that. 8% move there pretty quick, and now it's bounced back up off the lows from like, it actually ended up holding 1,800. Now it's back at 18, almost $1,900 on oil. I mean, not gold, sorry, not oil. Silver came down under 20 bucks briefly, 1990 or so, and now it's back up near 21. Not nearly as strong as gold, but it's bouncing back at least for now. That's kind of the look on that front. And then going into futures, the S&P is up 1.64% right now. The NASDAQ's up 1.67, and the Russell is up 1.74. So it's a pretty strong night right now. Right here on the futes. Ordinary people start lining up in front of small banks on Monday to get their money. I've been seeing some people talking about that and some pictures and stuff, but the minute they cut, we dump 20%. Well, everyone's focused on the cut. When they cut, we're already deep in. Yeah, no, I mean, and that's, I think, what a lot, like, I think the stats like 75, 80% of the past, 80% of the time over the past like century or whatever they mean, longer than that. When the Fed cuts, we actually see some big downside. And that's just because they're cutting because it's a problem. Like, they're not cutting because like, oh, we're good, let's just cut. Like, no. They're cutting because like, oh shit, like we gotta fix this, and we got a recession, generally speaking. So 68 calls in USO. Have a good night. Yeah, I'm about to hit the sack right now. Might have to ease up. These financial institutions keep on cracking. I think that they're gonna go one by one, but again, at the same time, right? What was the other one? The other one was Silvergate, right? Whatever it's called, crypto. And Silicon Valley was dealing with a lot of tech startups and a lot of tech companies and a lot of minimal profit margin, if at all, profitless companies, right? So is that super surprising? No, not really, in my opinion. JNUG, NUGT, give me the gold. Got to cut that short time. Bulls are not letting up. Let's see. How are we looking here? It does look like... oh, yeah, you know what? Here's a spot right here. Right, I guess you can put that highs there. If you go to like a 1 hour chart, probably easier to see. Yeah, I mean, hey, over this level looks good. If we start getting back up over like, I'll go to the S&P. Not that far. If we start getting back above like this 39.40 area, oh shit, like look out. There could be a nice push, dare we say, back towards 4,000. That's not a long way to go, but back towards that general area, right? Like maybe up into here, right? A lot of consolidation up in here. So maybe like the top end of that is like your target, like somewhere up into this range tomorrow if we see some strength. So with that said, I'm going to wrap things up for tonight. We'll do a live stream tomorrow, Monday afternoon, power hour, most likely. Maybe I'll try to come on earlier if I can. I'll be home Monday, Tuesday, Wednesday. We got some good streams on Tuesday for CPI and then Wednesday for PPI. I don't know if we'll stream. We might not stream PPI. We'll probably stream in the afternoon. It's when I have a chance to do it. And then I'm leaving on Thursday. I'll be back like next Tuesday, Wednesday time frame. So hope you guys have a great rest of your night, and I'll see you tomorrow if you want to hang out on the stream. Peace out. Good luck.